So you are just starting trading boom and crash, and you are wondering which strategy is actually the best to use, right? As for me, I actually use two strategies, right? And I'm going to be sharing those two strategies with you today. So stay tuned and watch till the end so that you can actually see these two strategies and see if you're able to work with them, right? And these are from my personal experience, right? So you have to try them on your own in order to see if they also work for you, because everyone has different trading styles and all that, different things that work for them, right? So, and if you're a beginner, one other word of advice that I would like to give you is, for me, right, judging from my own personal experience, I would encourage you to start by trading boom 500 and crash 500 only, right? And when you master that, you can move on to maybe boom 300, right? Then crash 300. Make sure that you are very stable, because the market there is very volatile, right? You can blow your account or make money from just a small movement, right? Any small movement, know that there's lots of money to be gained or lots of money to be lost, right? Then for the 1000 series, 1000 series is a little bit so like unpredictable in my case, right? So like not unpredictable, you see, you'll be able to analyze them, but what I'm saying is you can have so like let's say you're trading the ticks, right? You have a long time of what, let me go to boom 1000 so that I can show you exactly what I'm talking about, right? So over here, let's say you've got what you had entered, sorry, let me use this pen over here, right? So let's say you've got entered over here, over maybe somewhere over here, you do what, your supply zone over there, right? You entered for your spikes, for your ticks, right? And as you can see, everything is going well, right? And then just two spikes and you're out, right? That's what's boring about it. And if you're also looking for spikes over here, right, you can have a long time. Let's say over here, let's take this for example. Maybe let me first remove this, right? So let's say maybe you entered over here on this what supply zone over here, right? You can see it takes a long time, still going in the opposite direction, and when you finally blown or exited, when you finally lost hope, then it spikes. So it so like delays its movement. Rather than boom 500, it shows quick movements, right? It's just simpler as for me, right? Okay, if you want to try out the strategies that I'm going to be sharing with you, they actually work best on the boom 500, crash 500, the boom 300 and boom 300, crash 300, sorry, right? Those are pairs that it actually works on best. But for the 300s, they're a lot more volatile, right? So I would encourage you, because your heart isn't that strong yet to handle boom and crash 300, especially crash 300, right? So I would encourage you to trade those, right? So how are we going to be trading what this strategy, right? So first of all, I'm just going to be giving you a simple price action strategy that you can use in order to trade this, right? So this is the zone flip strategy, right? So when you've got what, let's say we're going down, we're looking for our ticks, right? We're going down, move down, right? We go up a little bit, right? We've got a pullback, right? And then this over here, this is the support area, right? And then the market comes down over here. It doesn't respect this area, it breaks it, right? So over here, we're going to be looking for entries when the market pulls back to this area, because remember, a broken support is acts as a resistance, right? So a broken support acts as a resistance. So over here, we're going to be waiting for this pullback to come back to this line over there, right? And then we'll be looking for our entries, right? And the basic support and resistance also works, but this is actually the best this is actually what I mainly am looking for, right? So over here you can see an example of that. So like somewhere in here, over here, right, we've got what, this over here, we've got what, over here we've got a breaking market structure, right? We've got a support area over here and a pullback to that area, and we continue what, going down, right? And over here you can also see that over here you've got what, move up, pull back, breaking market structure over here, right? And when the market pulled back over here, you can also get some small spikes over there. That's the other, and over here again, right? So it's actually very, very simple over here, right? Breaking market structure, small pullback, and then we continue, right? So that's what you have to look for, right? So that's the first strategy that I'm going to be sharing with you, right? And the other one is using what? The other one I'm going to be using the 50 moving average, right? The 50 and the 200, right? So let me just move this over to the side, right? Moving average, we're going to be using the what? the 50 moving average. Over here I use exponential moving average, apply to close. Yeah, I'm just gonna leave it as black, right? And then the 200 moving average, those are the two that I use. 200, and I usually use it as purple, right? And you like 1 pixel. I don't like it to be so thick on my chart, right? I want to see my candlesticks clearly, so I don't like the moving averages to be so thick, right? So over here, this one is very, very simple, and the confluence of this and the zone flip is the sweet spot, right? If you get those, you are in luck, right? So over here, wait for what, or the crossover wherever it crosses, right? So this strategy, you can use it for your ticks, for your spikes, anything, right? So over here, wait for a crossover, right? So over here, the market cross for what? For a down trade, you are going what? You are going down, right? So what do we have to wait for? Over here, wait until the what? After the cross, right? Wait for the market to pull back to the what? To the 50 moving average, this black moving average over here, right? And when the market pulls back over there, wait for candlestick confirmation, and when you get that candlestick confirmation, we are entering, right? And as you can see, that example worked, right? Though it doesn't work all the time, right? Like this case over here, right? But that's when you'll be using for our candlesticks, right? Though it didn't quite touch the 50 moving average over here, and when it touched, it actually broke past it, right? So when it breaks past it, you don't have to look for your entries over here, right? But so that's when you use your candlestick confirmation, right? So over here, if you had entered over here, you could have just scalped these small candlesticks over here, and on this pullback over here, it actually breaks the 50 moving average. So we're no longer looking for our entries, right? So it helps us filter our trades also, right? Over here, right? Pull back to the what? 50 moving average, right? Creating what? An M, right? Over there, here we didn't touch the 50 moving average, so obviously we wouldn't have had an entry over here, right? Unless you, I don't want to say gambler, but unless you maybe guess that it would work, right? So over here, this is an example where we would have lost over here, right? So as you can see, I've got a pullback to the 50 moving average, right? And as you can see, I've got a nice bearish engulfing candle over there. So we enter over there, and guess what? Market spikes on us, right? So we lose this one, right? And over here, the next entry, we actually get a chance to redeem ourselves, right? Because it actually went further down, right? So that's how we use this strategy, right? But unlike, just like any strategy, right, it doesn't work all the time, right? So you have to be very careful, apply risk management, and actually try it out yourself before you go live using this strategy, right? Because there's no strategy that's 100% perfect. If someone tells you that their strategy is 100% perfect, they are lying to you most of the times. Not always, but most of the times. Right? So this strategy is about, I would like to say, as for me, I would say 80% accurate, right? So try it out yourselves before you go live with it, right? So comment in the comment section down below what you think about this strategy. This strategy is in fact, right? And did I see an example? I didn't quite look for it. An example, we've got what? We've got the confluence of these two strategies, right? And you can actually use the 200 moving average also for your entries, but I'm not going to be talking about that in this video, right? You go check out the video that I posted about this, right? So over here, we've got, this is where we've got a confluence, right? So we've got what? 250, 200 cross somewhere down there, right? Over here, we've got what? This resistance area gets broken, right? When the market pulls back to that area, it acts as what? As a support, right? And that area also, we've got our 50 moving average. So as you can see, that's the confluence of those two, right? So if you filter those and only wait for when they meet, though it will be very, very rare, right? That's like this case over here again. Zone flip over here, we've got a breaking market structure, pull back, and we're also testing the 50 moving average, created the W. This was a sweet trade, right? And as you can see, it went up for a while, right? So that's it for this video. If you want to learn more about moving averages, then just go check it on my channel. You can just say it.